Welcome, it's denome. Merry Christmas and welcome to the last phase of this bull run. Now, in this video, we will take a look at the news, the fundamental analysis, as well as the technical analysis to determine where the prices of crypto and Bitcoin are headed next. Now, before I show you anything else, if you want to trade professionally Bitcoin or crypto and use leverage, personally, I use Bybit.com. I think it's the best leverage exchange out there. They have a very good demo trading account where you can practice trading and you don't have to risk your own capital as well. But if you do want to risk your capital, you can use the code denome to get a 10% discount for your first 30 days. You're eligible for up to $30,000 in welcome rewards. And there's currently a 500 USDT position airdrop, and I will link this in the pinned comment down below. You simply register to claim here, deposit money on bybit.com, and do the tasks, and you are eligible for this airdrop. And thank you for Bybit for sponsoring this video as well. Now back to the video here. The first thing that I want to show you is the big picture. From the lows of 2022 until now, the high of $108,000, this was a move of 600% to the upside. Now compare that to the previous bull run. The lows were here in 2018, and from there the peak was roughly a 2000% move to the upside. So we may still have some juice left in the tank for this bull run. So for that reason, even though there's a lot of crazy marks in the macroeconomic scale that may seem to me that there's going to be a major crash in 2025, there may be a couple of months left where you can still make explosive amounts of money. So that's what I'm going to focus on right now. But if you made money already on this bull run, consider backing some out of the market already and secure the gains, because the market is going to be extremely volatile, and whatever is happening in the stock markets, Bitcoin and crypto will simply follow it. So that's the unfortunate truth of the moment. So keep that in mind. I will show you some data regarding the upcoming market crash in this video as well. So look out for that as well. But that's the big picture there. Now let me show you the most recent news. So the first one is throughout the holidays, MicroStrategy, they were actually accumulating $561 million worth of Bitcoin with the estimated price of $106,000. So this is obviously nice to see. We like to see more Bitcoin buying from institutions, basically through the MicroStrategy stock. If you want to understand the whole MicroStrategy's game plan, you can watch that video. I made a separate video for that. But this is quite nice to see that they are just aggressively buying more. Also, another publicly traded company, Hut 8, they bought $100 million worth of Bitcoin. So these purchases are still going on. We saw some Bitcoin adoption in Japan as well, increasing, as well as we saw a MicroStrategy. They made a filing with SEC to issue 3,000% more MicroStrategy sales. So MicroStrategy, they want to continue on this path of buying more and more and more Bitcoin. So that is obviously one of the big price drivers for Bitcoin in the next couple of months. Eventually, this will crash when MicroStrategy they issue these bonds where they will be where the holders are able to convert the bond into MicroStrategy stock, and they will start to realize in 3 to 4 years from now. But until then, there's practically no sell pressure for MicroStrategy stock. But in 3 to 4 years, when the bonds mature, then we will probably see a lot of sell pressure for the MicroStrategy stock at that moment. That could cause a interesting situation with the MicroStrategy stock price. But that's not what we have to worry about today. It's just something to keep in mind. When we take a look at ETFs, we unfortunately have seen some outflows, as we can see here, $340 million on December 24th. And when we take a look at the chart here, the daily inflows and outflows from the ETFs practically since June, these are the largest amounts of outflows we have seen in a long while. Minus $680 million was the largest spike to the downside here. But then we have seen some diminishing sell pressure from the ETFs, which is what we also want to see. And eventually we want this to turn to green once again. But obviously this is not cool. We want to see inflows, not outflows. And I think we will start to see inflows once again, but let's see how that goes. But these are just some warning signs that you have to keep in mind as well. Usually we see outflows, they last for a couple of days and then it turns to green once again. So the next candle is going to be very important. If the next candle is going to be a larger candle, that's going to be a little bit worrying to me. But if it's a green candle, then it's probably going to be quite nice. Then also when we take a look at the Bitcoin ETFs, you can see the Bitcoin, when we not only to look at the ETFs, but we look at all of the Bitcoin funds, private funds, and the global funds, not only in the United States, but globally across the board. You can see that last week outflows were much more than the inflows as well. So sometimes, as you can see here, we see some sell pressure every few weeks here, but we do not want to see multiple weeks of red candles here. Obviously, we want this to turn around as fast as possible. Now, that's going on there. Now, let me show you why I think there's going to be a major crash in 2025. The first thing is when we take a look at the 10-year treasury and we divide the 10-year treasury with the 2-year treasury contracts, or we minus it from here. Usually when these treasury bonds, when the yields invert and they go to the negative zone, that is a signal that a recession is coming. Recession here, you can see it on the gray area. That is when you see a recession. And usually this also coincides with a massive market crash. So here in the 2000s, you saw the recession after the yields went into the negative zone, and after they bounced up from the negative zone, that's when the gray zone practically started. In 2008, no need to say we had the great financial crisis here as well, and that was also foreshadowed with this inversion of these yields. And now take a look at the area of this yield inversion, just a massive area on the negative side, and now we have definitely come out of that zone. So we are looking at a recession in the next couple of months, 3 to 6 months from now, practically, in my opinion. So we are right now on borrowed time. Before that, we could still see the blow off top, but keep this in mind that the economy, the real world economy, is complete shit show. I don't know how else to say it. Also, when we take a look at the stock market S&P 500, I reported this on previous updates that we fell below this trend line here. Now, we had the recovery, which was quite violent so far, back to the upside here, but we are still below the trend line here. And when we take a look at the multi-month, practically multi-year trend line from 2000 1900 and 1928 or 1927 year until now, practically almost 100 years of stock market history, you can see that we are at the channel high at the peak here already. And this is extremely worrisome for the fact that global liquidity is currently going to the downside as well. So when we take a look at the global liquidity here, which is just all of the M2 money supply of all the different currencies in dollarized terms, you can see that we have this line from 2008, so 16 years, and we were supported by this line multiple times in the past, but right now we are below the trend line. And when the global liquidity is going down and stock markets go to the upside, that means that it is in massive overvalued territory. So this is showing us that we're headed for a deflationary crash. And the Fed, they simply said no to money printing in the last meeting, which is why we saw the crash in the S&P 500 index. We saw the crash in Bitcoin and crypto. Everybody was expecting money printing, but they're now saying no. So what I think is that they're going to react to this eventually, but that's going to be too late. And the panic will settle in eventually. That will cause the crash. And then we will see the money printers go online. And Donald Trump, at least in his term, he's very pro print the money, rescue the economy, because he wants everything to be good in the world, or at least in the United States, and he don't want the stocks to crash on his watch. So I think when he finally turns on the printers, that's gonna be a massive bull run once again. But before that, I think they're gonna react too late. And at the same time, we have Doge, which is the government efficiency program. They're gonna kick out the illegal immigrants. They're gonna reduce government spending, and while doing all of that, that's going to cause some issues with tariffs on the supply lines. So that's going to be a major disruption in the United States economy. So what I think will happen is when Trump takes office, we will see a final pump to the upside. Everybody gets excited for all of the new things, the deregulation, all of these things. But then after that, when the pump is done, but the reality just sets in that there's no more money to go around, everything starts coughing, he will have to pivot on his plan, and then we will see the crash after that. That's kind of my current base case, what I think will happen. Now, it may obviously not happen like I'm saying it here. We may still get a bounce from this previous trend line here, and everything is going to be in the good zone once again. But the Fed meeting practically before the holidays, that was quite worrisome to me. Now, that is still going on there. In the short term, though, when we take a look at the charts, what is important right now is this area on the Bitcoin price. So this is the current resistance level. You can see we tried to break it once, twice, three times now. Now we went to the downside here. Now, if this breaks to the upside and we see over 100k Bitcoin, I do believe it's gonna go quite explosively to the upside. Why? The answer is liquidation levels. So when we take a look at the Bitcoin liquidation heat map, you can see we have a lot of liquidity here on top of the current price range. People are shorting Bitcoin right now, and that is causing or one of the reasons that caused the sell pressure here to the downside. People are expecting the price of Bitcoin to go to the downside, but I think the shorters, they are overextending here. As you can see, simply here at $100,200, we see a large amount of liquidations just here. So once these start to get liquidated, I think more people will flip bullish, and that will drive the price to the upside as the shorts have to close their positions and new longs are going to be opening during this time. So we have a chance to make a new high here in the short term. And also, just on a technical term, this was a double bottom here, signaling a reversal in the trend as well. So the narrative is kind of looking like it wants to go to the upside. And for the Fed meeting as well, there was a lot of speculation when I was looking at the different analysis that during the new year, when the year changes to the next year, there were some rollover contracts that needed to be closed and reopen, and that also caused short-term panic selling that we saw after the Fed meeting. So it was just multiple things cascading on one another that caused the price drop, and they think it's temporary. So who knows? Maybe it was, but in the short term, Bitcoin still looks quite bullish to me, as long as the uh, the the normal markets simply don't melt away in the short term. Obviously, if that happens, then Bitcoin goes to the downside. But in the short term, Bitcoin looks quite strong. Also, when we take a look at the order book liquidity, this shows us the difference between limit orders, limit buy orders, and limit sell orders. So currently, as you can see, we are getting a buy wall showing us that there's a lot of people who want to buy Bitcoin at these price levels with limit orders, just causing the price to be supported. Now, it doesn't mean that this will hold, but it's nice to see that we're getting this buy wall at this price range, because these usually signal a strong reversal to the upside. So let's see how that goes, but it's looking very, very nice at the moment that the price in the short term wants to go to the upside. Now, when we take a look at sentiment, sentiment is the tool that I use to look under the hood of Bitcoin. When we take a look at the amount of Bitcoin supply on exchanges, this has continued to go to the downside ever so slightly. So we're not seeing massive amounts of sell pressure from wallets into the exchanges, and that not being met with also buy pressure. So those are currently, as you can see, this is pretty flat for the last week. So the buy pressure and the sell pressure are kind of meeting each other at the moment, which is also nice to see. Eventually, this Bitcoin that has left exchanges is like a rubber band that when you extend it, eventually when you release, it will flip back, and that will cause the Bitcoin price crash as well when people really take in profits. But when we talk about profit taking, this is absolutely devastating to see. So when we take a look at wallets that have held Bitcoin for more than 1 year, wallets that have held Bitcoin for more than 3 years, and short-term wallets that have held Bitcoin for more than 90 days, we are seeing a lot of sell pressure from these wallets as well. We're seeing a lot of buy pressure at the same time as we're seeing this sell pressure. But what I would like to see is that this sell pressure goes to the downside, but that's not really the case. The sell pressure has been very consistent throughout over 90k price range. Even the old wallets, the blue line here, even they are still, we're seeing some sell pressure from those, which is simply not what we like to see. So this is a little bit worrisome to me, probably the most worrying trend at the moment, in my opinion. But it is what it is. It doesn't mean Bitcoin cannot go to the upside if it's met with buy pressure. But this is if the buy pressure for whatever reason leaves, then this is obviously quite bad, because then it will start pushing the price to the downside. Now, something else interesting, this was interesting to me. So when we take a look at the Bitcoin supply distribution of Bitcoin held in different wallet sizes, the largest whales, over 10,000 to 100,000 Bitcoin holders, we saw a large spike to the upside practically over the Christmas Eve here. So they increased their holdings a lot, but at the same time, as you can see, the blue line completely crashed through the holiday season here. So the whales that have 1,000 to 10,000 Bitcoin, they have been selling their coins here, which is obviously not what we like to see. What we want to see is that whales accumulate. But at the same time, some whales sell, some whales buy. What retail investors are doing here is retail investors have been holding is this green, this brown line here, as well as when we take a look at wallets that have 0 to 1 Bitcoin, which is this purple line here, they have actually been selling through this time as well. There's one indicator that I don't want to show you guys, but I've been looking at something called aggregated cumulative delta. I may make a video about it. At some point, it has been looming here on my charts. It practically shows us the amount of market buys and market sell orders, and that is showing that we saw a lot of retail investors selling during this time here. But since the price was not able to make a new low, that could be a retail investor, what is it? Capitulation moment here. But since the price wasn't able to make a new low here, it shows us that the whales actually bought this zone here while the retail investors were selling and panicking and all of these things. So all in all, what I'm saying here right now is that this area here is not the best time to buy. The best time to buy, in my opinion, is when Bitcoin crosses $100,000 or this $99,600 price range, because that would be a confirmation that we will probably continue to go to the upside to liquidate the shorts in the short term. And from there, what I'm kind of toying with the idea is that we will remain in this zone here until Trump takes office. So we might see something like this here. This is kind of my current thought. Now we might go below the range for a while, so that the liquidity, the limit orders from massive whales get filled somewhere around here as well at some time. But I'm not expecting explosive growth until the narrative kind of changes from what it is right now. And Trump taking office and him implementing the Bitcoin strategic reserve, obviously that is the big narrative change that will drive the Bitcoin price to the upside. But when the real markets start to crash, that's simply gonna be take Bitcoin with it as well. So that's kind of my analysis in the short term. Now, we could break out of the current structure here. I will be very happy when it does, or if it does that. But at the same time, let's take a look at altcoins. And altcoins, unfortunately, have taken a beating. So we are now back into this channel here. So this is from June of 2023. This is Bitcoin dominance, showing us that Bitcoin has outperformed altcoin market for the last 1 year and a half. And when this broke to the downside, I was like, okay, this is the start of the altcoin market, altcoin season. But we simply, boom, bounced back into the zone here. And now we already had a bounce from the channel lows once again. So now I'm thinking, I don't know if we will see a altcoin season anymore or not, because this might just continue to go to the upside as well, and Bitcoin will simply outperform everything else from the Bitcoin strategic reserve and narrative standpoint. Now, hard to say what's going to happen with altcoins. I have made some plays there because some altcoins have absolutely been devastated, and they should not really be devastated. So I have made some altcoin plays here and there as well. The altcoins that I have spoken about in the past, BNB, Beefy Finance, those are one of the strong ones, as well as Ethereum starts to show some strength as well. But the chart for Ethereum is just so bad that I don't really want to touch it. So when we take a look at the chart here, you can see like this here would be the left shoulder, the head with the double top, and this would be the right shoulder here. So right now, I don't want to really touch Ethereum until we we take out the head and shoulders pattern, and it gets invalidated by taking a higher high here at $3,550, or we have a bounce from the neckline here. But at this price range, I think the investment into Ethereum it's just not good. Also, I was looking at Link USD, and I don't like the chart here as well, because here is you can see the same thing. This is the left shoulder, the head with a double top. Here you can see the or triple top, and then this is the right shoulder. So I don't like to invest in Link right now, even though it might be absolutely beautiful, but it's just a little bit scary. So the altcoins not really showing a lot of strength, but there's still some altcoins out there that could have a lot of value. I made a play with Ordinals. Once again, I lost quite a bit of money here trying to trade it because I thought that this trend line would hold here. But right now we made practically this massive overextended low here. So if this gets taken to the downside once again, then I will probably throw away Ordi and not touch it anymore. But Ordinals, I think if this is not the local bottom here, then there will not be another local bottom. This is simply gonna melt away to the downside because this chart is just absolutely nuts. This is not what I like to see at all. But I made a play here. If it goes below this low once again, then I'm out of ordinals. But it is what it is. I just think the price move was way too much. It dropped 56% already to the downside. So I kind of had to take the play here because the upside is so juicy. Anyway, that's it for my market update today. I hope you got some value out of it. I hope you are able to trade well. Oh, one more thing. What is going to be the high? Currently, I'm looking at one single price level, and that is here. Let me show you these lines. So let's mark it with purple and this one with purple as well. So when we take a look at the lows here, we take a look at the tops here, that would give us a convergence in price, roughly $170,000 price here. This would be the probable top here in February of 2025. And from there, we will probably head to the downside if markets start to crash. But we will take a look at the markets, obviously, every single week. We will keep an update here. So we will have to see how the markets actually look like at that moment in time. If we see a different change in the fundamentals of the US stock market and obviously with Bitcoin and everything. But this is currently the price range that I'm hoping for. If not, then obviously I hate to do this, but you can see that this line here, this cannot be broken to the downside. If this breaks to the downside, that's going to be quite bad for Bitcoin, and we might be headed all the way to $50,000 lows here. So this is kind of like the final Hail Mary support line for Bitcoin price, and that basically has to keep. And right now, this current price, basically above $90,000 Bitcoin price, that has to and this low cannot be taken. Otherwise, we will go to that like 70 between $80,000 price range, which is which would be another local bottom. But right now we are still in this range here. I'm looking for the upside in the short term and then a pullback move to the downside once again. That's my current idea. So anyway, that's it for this update. I hope you got some value out of it. I will see you on the next video. Thanks and bye bye.